For me, it's just this very asymmetric risk reward, which is why I've placed all my bets in dat land, essentially.
We've had dat exhaustion. There's too many dats. It's a bubble in dats.
If you're able to take on meme-like properties in the process of driving these fundamentals, even bigger things could happen.
Hi, everyone. Welcome to Bits and Bits, exploring how crypto and macro collide one basis point at a time. I'm your host, Steve Ehrlich, High Scribe of the Unchained Kingdom, and I'm here with Ahluwalia, Maester of Wealth, leader of Rumida.
Let's go.
And we have two special guests. First one is actually a repeat guest, Chris Perkins, the golden hand of CoinFund. So welcome, Chris.
Hey, thanks, Steve. Good to see you.
I always like when people blush with the Game of Thrones nicknames. So Brian, wait till you see what we have for you. And then we're also here with Brian Rudick, guardian of the Solana crown at Upexi.
Very nice. Thank you so much for having me.
Yeah, no problem. And you can thank ChatGPT for those wonderful nicknames.
One early Bitcoiner sold 30,000 BTC too soon, missing out on over $1 billion. Don't want to make the same mistake? With Xapo Bank, eligible members can get instant cash without selling their Bitcoin. Check out xapobank.com/unchained for more.
Brian, why don't you just take a second to introduce yourself and your firm, since it's your first time on the show.
Yes. Thank you very much. I'm Brian Rudick. I'm the Chief Strategy Officer of Upexi. We are one of the largest Solana treasury companies, and we were actually a first mover in the space. So we did the first large-scale equity pipe to create an altcoin treasury company. We also did the first in-kind convertible note to raise additional funds. We have about 400 million in Solana. Prior to this, I led the research effort for GSR, one of the largest digital asset trading firms, for 4.5 years. Prior to that, I spent a decade on Wall Street, mostly managing a book of bank stocks, always in a long-short construct for firms like Citadel, Balyasny, Millennium. Mention that because DATs are just banks, and that's what got me really interested in this and allowed me to really internalize where all the value creation for shareholders comes from for DATs.
DATs are just banks. Wow, that's quite the provocative statement there.
Yeah, we could certainly get into it.
Yeah. And before we do, Chris, I know you've been on the show before, but just in case there's some listeners, new listeners, why don't you just briefly introduce yourself and your firm as well?
Yeah, I'm Chris Perkins, president of CoinFund, one of the managing partners here. We're early stage investors with seed, venture, and liquid strategies. We've been around for 10 years. My background was also in traditional finance. I actually started as a U.S. Marine, was in Iraq, came back and had a career both at Lehman. So blown up in Iraq, blown up at Lehman. And then I went to Citigroup prior to joining CoinFund 4 years ago.
All right, great. So it's been a couple of weeks since we hosted the show due to summer holidays and some other things. So Ram, why don't you start? Just give us a quick recap of the month and sort of your take on what's happening so far. Historically, I think most people listening here know that September does not tend to treat Bitcoin and crypto very well. Is there reason for hope this time around?
Right. Well, that's where we left off, I believe, on the last show where I was on. Is like discussing just the negative seasonality around Bitcoin, and shared that I thought Bitcoin would struggle to get above 125K due to that and some other factors. You know, you had a lot of enthusiasm around the passage of the Genius Act, the stablecoin bill, and after that, it's hard for markets to see forward. Through that, you're also seeing just a softness in what I call animal spirits. So high momentum names that retail traders love have just been weaker, which generally also happens this time of year. So I think that's a part of it. This happened the last year and the year before that too. The Clarity Act is something to stay focused on. Maybe we'll touch on that soon. I doubt it gets passed in the first attempt, just like the current stablecoin bill as well. There's some concerns around Bitcoin and the 4-year cycle, which for those that follow the cycle says that Bitcoin tops in November or so, and some people are saying the cycle's over. I don't think that's the case for where we are now. So when people were excited, I was pessimistic. People are getting pessimistic and getting a little more cheery. So we're kind of in no man's land, though. We'll come back to that in a moment, though. But I believe those are the highlights. I think one thing else I'd share is that several of these DATs have just not performed well. We've had DAT exhaustion. There's too many DATs. It's a bubble in DATs. We've been talking about this bubble in DATs for a while. When Wall Street sells too much product, be cautious. my view is that you have one leading DAT per asset class: Bitcoin, Ethereum, Solana. Maybe there's a Pepsi. You're going to have a Coke, you're going to have a Pepsi, and then no one cares about number 3. Some of these are trading below MNAV. Michael Saylor, who obviously leads MicroStrategy, or Strategy, which they called it now, changed the rules governing when they buy Bitcoin. I think that helped spoil the market in a certain way, right? The whole thesis around Bitcoin is like immutability, and you just change the rules.
And then he changed them back.
You change them back, like that doesn't help. That doesn't help. None of that helps. Can't change things, but he had to change things. So these concepts are being tested.
Okay, so let's talk about DATs, since we have I guess maybe our first DAT representative on the show. Brian, Upexi was very early into the Solana treasury game. Talk about what the last couple of weeks have been like for you.
I'd say not much has really changed. So for us, we're really focused on what we can control. For any DAT, that's really 2 things. One is you want to be as visible as possible. So you want to maximize people actually knowing about you. And so if they think about, hey, I want to invest in Solana, maybe a DAT is the best way to do it. They think about Upexi. And so we announced this morning that we're at 3 different traditional finance conferences later this month. I'll be disappointed if our pace doesn't pick up over the rest of the year. And so we're really hyper-focused on increasing our visibility. We have a bunch of other initiatives afoot there. And then the second component is issuing equity, which would you issue equity above book, it is by definition accretive for shareholders. MSTR selling at 2 times. They've come in a little bit, but it's tantamount to selling $1 for 2, or buying Bitcoin half off. And this is how they created literally 26 billion worth of free Bitcoin for shareholders over the last 6 quarters. So we're very focused on figuring out what we can do there. We have an equity line that we're hopeful will go effective very soon. And then we're always out in the market, and this is not MNPI. This is the business model of a DAT to raise capital in this accretive fashion. So we're looking at all options in order to do so.
Okay. And Chris, let's you go ahead.
I think Ram's too negative. If you step back, this is the summer of DATs. 2021 was DeFi summer. This is where DATs came on the scene and established themselves as a core innovation. And a lot of that unlock was frankly regulatory. Saylor proved it. And now we've got this regulatory unlock. Now, I'll agree with Ram. There's a ton of froth. However, I believe, probably like Brian here, that DATs are going to emerge as a fundamental part of market structure within crypto ecosystems, public facing. And then you've got the foundation labs, maybe they consolidate. But this has been a major innovation. And the reason why not all of them have been successful is because it's really, really hard to pull it off. And we've been very, very active in the space. To make a DAT work, you need about 5 elements. Market timing has to be right. The market has to be ready for you. The market was closed for a long time, really important. Timing is hugely important. You need good fundamentals on your token. And I think as we depart Bitcoin, we get into yielding assets. And that gets really exciting when you stake and you restake, and you can generate fundamental value that way to generate a natural MNAV. Foundation alignment really, really helps. You need to have a really good advisors, bankers who know what they're doing, top notch. You need a strong management team. You need good asset managers who know how to manage those underlying assets and drive that yield. And then perhaps most of all, you need a KOL. You need someone who can tell the story and who can translate. These DATs are beautiful convergence tech innovations. They bring it all together. I think they're here to stay. Yes, there's going to be a shakeout, but the winners are going to be really, really a special thing to watch. And we're very excited. And by the way, I don't think we're at the beginning of this. I don't think we're at the end of this. I think we're at the very beginning. I think there's some amazing projects that are still coming out. And we remain really excited.
Yeah. Brian, one of the interesting trends that came out when DATs first came to prominence, I guess, post-Saylor, was the fact that the first companies to follow were focused on Solana, not ETH. And it was you guys, it was Soul Strategies, and it was DeFi Development Corp, I believe. I always get that last name. I was confused that last name. But now, ETH recently hit an all-time high. ETH treasury companies are raising billions, and Solana is all of a sudden in certain ways maybe the little brother to Ethereum again. What is it like for you right now? Because I'm sure when you're out fundraising, investors are asking about the differences between Solana and Ethereum. They both can generate passive yield. What are some of the hard questions that you're getting in some of these meetings, and what are your responses to them?
Yeah, that is a great question. I would say that candidly, the knowledge in TradFi is quite low. So the most common question I get is like, what's the difference between Bitcoin and Solana? Not even like, what's the difference between Ethereum and Solana?
I
So
thought we were past that.
yeah, I mean, there are some folks that have some sort of a background in crypto or digital assets, and we'll start to ask hard questions, but nobody's asking me about like, when is Solana going to implement multiple concurrent leaders, like that type of thing. I still think that there are some folks that don't truly buy into the value creation from a DAT. Like for me, it's really about having access to these value accrual mechanisms that, by the way, all compound. So the big one is issuing equity above book value, which you can do either via like an ATM or an equity line, or even if you go to any sort of like convertible note issuance. Most like options pricing models will have like a really high delta there, and will suggest like there's a 90% plus of these things to convert into equity because the duration of these notes are so long and the volatility of the underlying is so high. So that is another way for DATs to actually sell equity at an even higher MNAV than where they're currently priced. And so like that to me is the big one. This is where like MicroStrategy has created so much value for shareholders. It's more than tripled the return of Bitcoin, and it has barely any leverage. But the second thing is when you get into pre-mined tokens, or you get into tokens that are built on a proof of stake consensus mechanism, you can do things like staking, where like Upexi is staking to earn an 8% plus yield, turning our treasury into this productive asset. And we're also buying locked tokens at this 15% discount. If you put that discount into any sort of yield equivalent, we're roughly doubling the staking yield on anything that we buy in locked form. And we have this buy and hodl strategy. We don't intend to sell any SOL, so there's no reason for us not to do that. And so these additional value accrual mechanisms are things you can't get by buying a token natively or in other instruments like an ETF. And so I think a lot of this is investor education and just walking them through how powerful this model can actually be when you're underpinned by the right token.
Can you elaborate on the statement you had at the outset around banks or DATs? Like banks are FDIC insured, they can rehypothecate, they have a lender of last resort. What were you getting at there?
Yeah, this is a massive simplification, but banks earn spread income. They raise funds from depositors, they lend to borrowers, and they make the difference between the yield on loans and their cost of deposits. And then also a massive simplification, but investors will basically present value all of that future spread income and add it to book value. Banks generally trade above book value. They don't really issue equity because it's hard to come by loan growth. But there are historically some banks like M&T that have just issued equity again and again because they traded at this premium multiple and they used it for this roll-up strategy, and they just basically...
It's more of a BDC, I would say. It's a BDC, like a private credit fund that's publicly traded. Business company. They make loans, they earn spread, they've got some back leverage. They're trying to capture that spread. And they're
We're kind of the same way. So we raise funds from the capital markets. We invest into Solana. We earn the difference between the return on SOL and our cost of capital. When the market thinks that the return on SOL will outpace our cost of capital, that spread will be positive, not just this year, but in future years. They will present value that, add it to the NAV, and that will work out to be something that's above 1 that we can then monetize for shareholders.
Got it.
It's hard to underscore the importance of this education, right? Now we have these DATs running around all the traditional long-only investors and explaining, what Solana means, how it's a yielding asset. Like that education is just so good for the asset class. And I think that's probably the biggest benefit to the ecosystem of what we're seeing here.
Yeah.
Is it education or marketing promotion?
It's both.
When we first started, there were a lot of questions as to whether this was just a money grab and whether DATs were this existential threat to the token ecosystems they're underpinned by, because you could be a forced seller at exactly the wrong time. And then I think folks have seen like Ethereum success and Tom Lee is on CNBC every other day. And in my opinion, like this is what lifted ETH from 2,700 to 4,700 is the main reason.
Yeah.
So I think like now there's this big focus by a lot of other token ecosystems to really embrace and push DATs forward just as another key visibility mechanism to get them out there, especially to traditional investors.
There's so many DATs, like I wonder if you were to poll someone on Twitter and say, can you name 8 tickers for DATs? I don't think anyone could. I know Chris could. I know Brian could. It's like, I think about the dad who has like 8 kids. I struggle with 3 kids, my kids' names. I call one by the other name. People know MSTR for sure. It took years to build that brand and awareness. It literally comes down to these things, like how many elements can the human mind recall? And you're competing for those slots in the context of other tickers. It is the attention game. It's not just the product game, which is Brian and Chris, where you were focused on, and the value creation machine and the financing machine and the staking yield packaging machine, et cetera. It's like there are not enough slots in the human mind for all these players to succeed and thrive.
What do we make though? I mean, the attention game. I mean, Tom Lee and Bitmine, their MNAV is I think 1.1 now, and it's been dropping. What do you guys make of that?
So I haven't been super close on other ecosystems, but my impression is that Bitcoin has kind of become saturated. I think you're seeing some like Imperi and Sequans that are trading at like 0.7, 0.8 of NAV. I don't think that Ethereum is saturated, but I think it is a bit of a race. And so I think you're seeing some of the players in there sell equity all the way down to 1 times, whereas you had someone like MicroStrategy that when they were the only game in town, they would only really sell via their ATM when they were at 1.6, 1.7 or higher. So I think all that selling out there, and I see why they're doing it, they want to be the biggest because whoever's the biggest gets the most trading volumes, and then you can issue the most equity via the ATM because that's what you're kind of limited by. So like that, in my opinion, is what is happening out there in the other token ecosystems. I do think that Solana has the highest staking yield. You can buy locked tokens at this discount for built-in gains for shareholders. And so I do think like there's some argument for a Solana DAT to trade at this higher MNAV versus some others. And so far that is proving to be true. But again, like, I mean, it's out there in the public news, there are other Solana DATs coming. So we'll see if that does anything to the MNAVs either way.
Yeah, I think you're at 1.7 right now. I was just checking your website.
Chris, in your view, what's the better move? Like, is it better to own spot commodity or own the DAT? If I look at Ethereum, like Ethereum's got a forced bid from these DATs. So it's an accumulation bid. And if you're a DAT, you're issuing shares. That's called dilution. That's sell pressure. It isn't the simple idea just buy what people are forced to buy. Keep it simple.
Okay, so it's still super early as we get into a lot of the DATs. And I'll give you an example. Last week, we put together a letter to the SEC and FASB because LSTs were considered, liquid staking tokens are considered intangible assets. And so like we still need to have a lot of things to come together. A lot of these DATs are only getting the machine running right now. I saw that one of our portfolio companies, EtherFi, benefited from, Ethzilla, put some ETH to work there. So it's very early. But when you step back, let's look at like ETH as an example because there's a little more complexity around the ETF. You can invest in the ETF. You can invest in spot. For a lot of investors, they can't touch spots. So that's off the table. That brings them to the ETF. But the ETF, they can't generate yield because of there's a lot of constraints around daily liquidity with ETFs. You have a 13-day unbonding window. You can't just stake. Eventually, they'll figure it out and you'll have a total return product. But it's an inferior product. No offense to the ETF issuers, but it is because you don't get that yield. And that's core to the investment if you're a long-term investor. If you're any term investor, right? You want that yield. Okay, so that brings you to the DAT. The DAT has that wrapper like the ETF that you can buy, on your brokerage account very easily and very accessible. It gives you greater access to the yield of the underlying product. So in a sense, it's a better product because you can't touch spot because you're a traditional player. You're not allowed to. It's not part of your investment authorizations. It's a little bit better than the ETF. So that brings you to the DAT for here and now. At the same time, maybe someday a pure total return ETH product will emerge. And so maybe you have a little lack of transparency. I think the DATs are trying to say, wait a second, we're going to differentiate through transparency. This is what we're doing with the assets. And that's the game, is to give investors not just access to the asset, but to everything you can do with that asset, leveraging DeFi and everything else. That's the investment case. In a wrapper that they understand and in a wrapper that they're allowed to deploy. Oh, by the way, you open up the entirety of US equity capital markets. You can eventually, it's no different than any other equity. You take it to your prime brokerage account, you can get leverage, and you can use all the other things that you use equities for, collateral, et cetera, going forward. So that's the case for this instrument. You're right, Ram. There's like plenty of froth. I talked about the elements. They all have to come together. It's super hard. It sounds like Brian's got it figured out. But that's the case.
The one thing that I would just plus one on is I really do think that people haven't fully internalized just how powerful this accretion is and like compounding NAV over time. And so here's the math, and this is what helped me. And these multiples have come down, but this is the numbers that are fresh in my head. So say I want to start a DAT to buy Solana, and let's say all the comps are trading at 5 times. So I raise $100 from Steve. I give Steve 100 shares. He now owns 100 shares worth $1 each. But my DAT is holding $100. I now remix that USD into Solana. And because now I hold $100 worth of SOL, I achieve this peer-like multiple. And now it is a 500, and peers are all trading at a 5 times MNAV. Now my company has a $500 market cap, and Steve owns 100%, 100 shares worth $5 each. Here's where the accretion comes in. I now want to go raise another $100, but because I'm trading at $5 a share, I actually only need to issue 20 shares. So I go out to the market, I sell 20 shares at $5 each. I get another $100 US. I remix that into Solana. It takes on another $500 market cap, and now it's a $1,000 company. Steve has actually been diluted. So he owns 100 out of 120 shares, or roughly 85%. But now he owns 85% of a $1,000 company. And he just saw his investment move from $500 to $850 via one accretive issuance. So my one point is just this accretion math is so powerful, and you can trade at this premium that you could just use it to continually compound NAV. And as long as your multiple holds, your share price should move up commensurately. The second thing is I personally feel once we get past this wave of supply, that MSTR should be the floor in terms of MNAV. They're trading at like 1.6 right now. I say that because there should be some sort of embedded growth premium for a smaller company. Like if we issue $100 million of equity at 2 times, it's going to be very nicely accretive for us. Whereas if MSTR issues $100 million of equity at any multiple, it's not going to move the needle because they're so big. So there should be this embedded growth premium for us. Similarly, when you are underpinned by a much smaller token, all else equal, there's more potential upside. So SOL is literally 4% the market cap of Bitcoin. Bitcoin is unlikely to 5x from here, over any reasonable time period. It's the 5th largest asset in the world, whereas Solana has a lot more potential upside, all else equal. So there should be more embedded growth premium there, and then access to these additional value accrual mechanisms that you don't get with MSTR via things like staking and buying locked tokens at a discount. So for all those reasons, I kind of think when things shake out, at least I'm very hopeful that other DATs will end up trading at a premium to wherever MicroStrategy is based on market conditions. But that's at least how I think about multiples.
If you're able to take on meme-like properties in the process of driving these fundamentals, even bigger things could happen.
Oh, yes.
And let's be honest, this is a phenomenon we witnessed in crypto. We witnessed in equities as well. And that's the other thing to be mindful of.
Well, the whole goal is for these things to become a meme. Not all of them can. This is like a Highlander game. There can only be one. That's the nature of memes. You've got Palantir, Tesla was a meme, but you can't have them all meme. That's my view. Now I'll ask a question for you. I think I have an answer as well, but I want to get your perspective. So as an investor, would you prefer a high market cap to NAV or a low? Now, I think you're going to say, Brian, I want a high M cap to NAV because I can go accumulate the underlying spot. That's number one. Now, the irony of obviously is that you get more value with a lower MCAP to NAV. So there's this reflexive property at work. And I think the game only works so long as the DAT has momentum. And when momentum breaks, you better get out of the way. And the funny thing is, if you trade below MCAP to NAV below 1, you're an acquisition target. If your MCAP to NAV is very high and you do an acquisition, I believe that that asset price would drop. So I think this is more complicated. There is a very complicated kind of game theory that plays out.
I have so many thoughts. So high versus low MNAV, it all depends on where I think my MNAV is going in the future. If there's one DAT that trades at 2 times, one that trades at 5 times, if I think there's going to be convergence, I'd rather buy the cheaper one. If I think they'll stay where they are, I'd rather have the one trading at 5 times because their issuance is going to be more accretive. And then for me, it kind of all boils down to risk reward. Like if we trade at 1.6, 1.7, I look at like 1 times as the floor. And then you're like this, I don't want to say levered because it's not really leverage where all this comes from, but we're going to trade with some sort of beta to Solana. And so, the risk reward is that Solana moves up very considerably. In times like that, our MNAV will likely move up as well. So Sol Strategies was trading at 15 times MNAV back in December. It was a different market. There were many fewer options, but that can show you like where these MNAVs can go to. And then when you do trade at these higher MNAVs, you can do more and more accretive issuances for the benefit of shareholders. You add in all those things and they kind of compound versus like, what is the downside? Maybe we drop down to 1 times, maybe Sol falls 50%. And so for me, it's just this very asymmetric risk reward, which is why like I've placed all my bets in that land, essentially.
All right, this is a really good conversation, but we do need to take a quick break to hear from the sponsors who make this show possible.
Selling your Bitcoin just to get cash? One early Bitcoiner did and missed out on over $1 billion. With Xapo Bank, you can access up to $1 million instantly without selling a single sat. Eligible Xapo Bank members can borrow up to 40% of their Bitcoin's value. No stress, no selling, no buying back in. Use it for what matters most. Your dream home, your child's education, a getaway, or that can't-miss investment. With Bitcoin-backed loans, you're in control. Set your installments and repay in Bitcoin or US dollars, your choice. Enjoy competitive rates, 0 fees, flexible terms, and no penalties for early repayment. And your Bitcoin stays safe, never rehypothecated, relent, or pooled. It's securely held until your loan is repaid. Check them out at zapobank.com/unchained.
So I want to turn to some of the tokenization news that we've seen in the past, but I just want to go around the panel really quickly. Where does the altcoin movement go from here? One chart that has been circulating on Twitter, I'm sure you guys have all seen it. Bitcoin's market dominance is around 58% and change or so. I know during at the peak of the COVID-driven boom, et cetera, it drops down to like the low 40s, even below 40. Not necessarily saying that history is going to repeat itself, but it does suggest that this rotation out of Bitcoin into alts has some more room to grow. Brian, for someone like you, I mean, that could be open season for perhaps Upexi investors, but Chris and Ram too. I mean, this is sort of the time when guys like you also make your money. So maybe Chris, let's go to you first. I mean, what do you think? Like, where do you see us in this current altcoin cycle, and what are your goals in the next couple of months?
Very bullish alts right here. A lot of it is predicated on the regulatory de-risking that we're seeing. Even in the absence of clarity, you're seeing like yesterday, the CFTC and SEC announced, coming together to work to allow spot tokens to list. And so that crystallization of alts as largely commodities is going to be a nice unlock. And I'll give you some alpha. What I'm looking for, and I think one of the biggest things to watch for as alt unlock are listed futures in the US. Because as these tokens start having listed futures, you know immediately that they're a commodity, because as you go through the process, the SEC didn't hold it up. It unlocks basis trading, right? Where people go long spot, sell the future. When you do that, spot goes up. It unlocks ETFs, because what do ETFs rely on for surveillance? They rely on the futures market. So the one thing to watch for are alt futures coming into play, listed futures in the US, because again, it's like the missing link for a lot of institutional buyers of DATs. Now we have some initial SOL futures for people like Brian, but as we go down the curve, I think this is going to be something that I'm looking for. I think it's going to happen now with the regulatory certainty that we're starting to see. I mean, have great conversations with regulators all the time. That's going to be huge. And so look, that aside, I think that we're seeing, an incremental focus on fundamentals. There's good projects, there's bad projects, and there's ugly projects. We'll continue to look at fundamentals. And but I do think that we're starting, this education process is so important with the DATs. People are going around saying, this is ETH. Okay, this is what Solana is. And as we go down, investors are like, wait a second, these are different, they're nuanced. I like the utility of this token because it's at the intersection of AI and crypto. That makes sense to me. So I'm very bullish, and I think we have a long way to run.
Yeah, for me, I would say that thinking about it in the exact same way over the medium term, near term, I agree with Ram. Does seem like risks are mounting, like national debt concerns, sticky inflation, tariff uncertainty, elevated valuations, but we've been dealing with these for a while. And so I kind of think like near term altcoin prices will go the way of macro and policy risks. Long term, I am supremely bullish. My view has always been that the biggest thing holding crypto back is a lack of clear rules and regulations. I think that we are probably going to get that with the Clarity Act sometime next year. I think that generally like incumbent big tech and big finance firms haven't really wanted to come into crypto and disintermediate themselves, particularly if it adds legal and regulatory risks. But now, once we get regulatory clarity, they're going to have to come in a big way. It's all these big incumbent firms that this is a bit antithetical to crypto. They literally have billions of customers. They've got built-in trust. They've got billions of dollars worth of capital to throw at it, and they have the top developers. And so this would be something like Google Chrome adding in a crypto wallet, or something like Amazon adding, and accepting like stablecoin payments. And we actually have like the opportunity to potentially onboard the masses. And so I think like we could potentially be on like one of the biggest altcoin booms that we've seen over like the medium to longer term.
It's a great point. So you have the DATs that are buying, you have trillions of dollars of stable coins coming in that are buying, and then you have 401ks coming in that are structural buyers for the first time. That's pretty powerful. Appreciate the macro noise that's always going to,
I'm on the other side of the macro. I'm actually on the bullish side of the macro, by the way, just to be clear. Like, I think rates are coming down. I think that's bullish. I think fiscal deficits are bullish. Income tax cuts for sub 150K are coming. That's bullish. There's some indigestion in near term around tariffs, but markets are looking through all of that. Like retailers, which import from China, they're up substantially. So I'm actually bullish on the macro stuff. There's like a couple of weeks to sort out in September. So like timing matters. I agree also like on, and Chris, you made this point actually the last time you were here about, hey, after the stablecoin boom, you get the DeFi boom. I think that thesis is right on the mark. I like that thesis. I like that thesis in spot. Ethereum has momentum though. Like these are digital assets. These are momentum. It's all about momentum. Momentum is the measure of the attention. And one last thing I'll say there is the person with the biggest megaphone for onboarding new flows, as Chris's point is flows. Okay. The biggest megaphone is Tom Lee, not the guitarist.
That's right.
The heavy metal guy. It is Tom Lee, who might be going on Joe Rogan's show. And what is he talking about? Ethereum, right? Attention follows a power law distribution. Like, keep it simple. What has momentum? What has attention? What benefits from regulatory clarity? What's been highly shorted and is not transitioning from non-consensus into momentum? It's Ethereum. If you look at the Ethereum chart, you wouldn't guess that people feel despondent. And there's that kind of malaise out there, right? You wouldn't guess that. You look at that chart like, oh no, these Ethereum people are happy. They're sitting pretty. But I like Chris's point though on especially around that DeFi thesis. You look at like Aave. Look at Aave. It's a leading DeFi protocol on Ethereum. It's doing fantastic.
Yeah, but after DeFi, they're going to go to the agents, right? Because you can manually try to optimize your yields. Like this is the whole stablecoin thesis, right? one of the greatest gifts to crypto was that the regulators and the banks suppressed interest, because now you got to find it back. You're going to go to DeFi and you're going to realize, okay, I can do it. I'm okay with it. But my agent over here, and we invested in a company called Giza, Arma agents. They're awesome. Let's let them do it. They can do it better because they're awesome at optimization. So that narrative is coming together nicely.
Ram, I wanted to ask you a question about the macro outlook. I think I know the answer, but I'm going to ask it anyway, because you tend to say things are nothing burgers. But just given the tumult at the Fed, like what's going to happen with Jerome Powell, obviously now Trump is trying to fire Lisa Cook, and I guess we're going to have to wait for the Supreme Court to decide what's happening there. The IAPPA.
No one cares. Nothing burger. Sorry. No one cares.
But
cares.
I wanted to get you on the record, but I kind of knew.
What matters?
Like, let's just ask my wife. I know what the answer is going to be already, but I still have to do it.
In the long term, what drives asset prices? Earnings growth, the level and change of interest rates, the level of change in inflation, which drives policy. In the short term, what drives asset prices is positioning and incremental news flow. So that news around that termination is short-term incremental news flow. It's negative, it gets priced in, and then you move on. That's it. Every buyer of an asset bought that asset fully informed about the background news information. That's what causes the pricing in. The fundamental backdrop is strong. We just wrapped up a quarter with exceptional earnings growth, and we have more stimulus coming and rate cuts the economy doesn't need, which is bullish. I disagree with the policy, but I'm bullish. That's okay too. I have exposure to these small caps and rate sensitive names and things like home builders now, and consumer discretionary stocks, because the backdrop is bullish and the consumer is strong. This is a strong consumer. Yes, it's a bifurcated economy. Yes, there's pressure on the low end of the consumer. Always was, always is. What matters is the top 1/3, they drive 2/3 of spending on average, consumer spending. You can see the utilization, different areas, travel and leisure, airlines. Banks are lending again. Bank lending activity is increasing. Bank deregulation is still coming. That's stimulative. We're talking like more credit creation. You're seeing private credit firms compete for deals. I talked to a sophisticated bank that essentially is like a private credit fund wrapped with an FDIC insured charter, and they're starting to say no to deals because there's so much availability of credit. Now, at some point that's bad, but it's not now. We're not seeing DQs flare up. Things are actually quite reasonable, and credit begets more credit. The cycle just keeps going. There's no external pressure to stop that from happening.
Why don't we turn to tokenization? Because there was some big news this morning that we were talking about on Telegram. Galaxy, I think it's tokenized they did not tokenize some of the shares. They just directly issued shares onto the Solana blockchain in partnership with Superstate. I know that, Chris, that got you particularly excited because there was no sort of like middle layer. It was just a native issuance. And I think the hope is that will be the future. So why don't you kind of share some of your thoughts?
Yeah, disclosure, we're investors in Superstate, good friends with Rob Leshner and the team. And gosh, this is a guy who decided to start a regulated asset manager and transfer agent in the depths of the Gensler era of destruction. Fast forward to today, this is a big deal because today what we've had like this idea of tokenization of RWA. And as a banker, I hate RWA so much I can't begin to tell you, because it stood for risk-weighted assets and it gives me PTSD. And so I'm sure we're going to screw up the acronym here. But the way it used to work in the past, and this is how stablecoins largely work as well, is you take an asset, you put it in a box, you issue a token to represent that asset, and then you set it off into the ecosystem. But this is different because it's canonical. And you don't have this stock that's locked up in a box and Bank of New York custody account, and then you issue a token on that represented asset. No, this is canonical. This is a canonical digital asset that we've actually taken a share, and that's the only representation of that share. This is a big deal when you put it on blockchains, and they used Superstate as the transfer agent. It's regulated. And when you speak to people like the SEC Chair Atkins, he's like, hey, we need to make IPOs great again. We need to make capital markets great again. We need to make them more accessible. What is more accessible than a public blockchain? And this was issued on Solana. Incredible job. Solana's always tried to position itself to be the decentralized NASDAQ. What a great step forward for that team and that ecosystem. And so now you have these assets. Now, they're not perfect. This is a great first step. And I would say this is an improvement of what we've seen in the past. I'm also very excited about the tokenization of private equity. But this wasn't like some SPV where you're getting some, piece of the SPV and blah, blah, blah. This is a true stock, a tokenized equity. Now, you can't trade it yet on AMMs. There's this thing called regulation NMS. There's an NBBO. What this means in simple terms, national best bid offer, is that equities need to get routed to the best price on an exchange. And if you have an AMM and you have the traditional system, they kind of don't talk. And so I think the SEC is going to work through some of those challenges on what we call Reg NMS. But you can transfer these stocks peer to peer for people that have gone through the right onboarding process. And this is the beginning of unlocking this global internet to buy assets like equities. I'm hugely excited. Last thing I'll say, because I could go on forever, I get too excited. The IPO market cap last year was like 30 billion. The meme coin market, that's how much money was raised. The meme coin market cap was like 140 billion. It's an apples to oranges relationship, but we're soon going to be able to unlock the superpower of blockchains / transfer agents, and that's capital formation.
Right. Got in my head. Capital formation, that gets me turned on. So yes, we need more capital formation. The registration and listing costs for public markets is way too high. The on-chain activities that are done by firms like Securitize through Reg ATS and all this stuff is just trying to mix TradFi with permissionless networks. It doesn't work. So the direction of travel is good. I think Galaxy's move is mostly symbolic. You get 24/7 trading. That's the main unlock. But the symbolism means you're going to get more to come. The funny thing about this, actually, I was took my family to the beach this weekend, and as one generally does on a holiday, you dream up different things. I actually posted this on Twitter. I said, should Lumida, so actually like Robert Leshner, I started Lumida as a digital asset wealth manager in the bottom of the bear market. And the first thing we did is with SEC Chair Arthur Levitt is criticize Gary Gensler in October 2022. And then we said digital assets need a regulatory framework, and fast forward, here we are. So, but I wrote, should we tokenize on chain, the equity on chain, on August 31st. And then I see this news from Galaxy, like, oh shit, something's in the water. Second thing it means that no ideas are original. Chris, this as a VC guy. Someone has one idea, somehow the magic of a consciousness or whatever it is, I have no idea. 100 people all around the world have the same idea at the same time. It comes down to execution. So I have no doubt we're going to see a lot more of this happen. I think it's mostly symbolic. Like what I'd really love to see is a way to get a permissionless market going that provides an unlocking of participants. The things to sort out there. You got to have sanction screening. You got to make sure North Korea cannot get involved, right? Like these DeFi pools that are engaged in this market, and there's really fascinating things happening. Like Credit Coop. I don't know if Chris, you've taken a look at that. What they're doing to finance Rain Card, which is a credit card that lets a crypto native spend, and they tap into the digital asset wallet on chain, right? You can finance that on chain. You can make a deposit and get a 14% yield on chain. It's amazing. That's a bank on chain. You can deposit on chain, get a 14% coupon, fully collateralized with T+2 duration risk. You get liquidity in 2 days if you want. That's incredible. That's a mispriced short duration high yield asset, but it's all permissioned, and it's a step in the right direction though. Same thing with the Galaxy. So, if you look at SEC Chair Paul Atkins about 3 weeks ago, he gave a speech, and this follows Besant's speech about a month ago, and it was timed a week before Fed Governor Bowman's speech, and both were pro-innovation. And Paul Atkins specifically called out tokenization and the rise of the super app, and Bowman also talked about tokenization as well. So the regulators are they've already announced and signaling the market, hey, we're going to get out of the way if it's lawful and compliant. So we're moving into that world now. You're going to see 200 fintechs. They're already applied for OCC charters like Anchorage. Dozens will be approved in the next few months. So I think Galaxy is very symbolic, but there's more to come behind it, and we need more permissionless frameworks to unlock the next level.
I just want to build on that, Ram, because I think you made an important point. And Chris, you did too. Solana obviously is a permissionless blockchain, but Superstate is very permissioned. And I mean, Ram, you were getting at that as well. I mean, I've followed tokenization for a long time. I'm sure all of you have. And I can't tell you how many pilot projects, and I know this is not a pilot project, but of like tokenizing some sort of credit instrument or whatever. And there could be a huge 9-10 figure top line number, but there's no secondary market. There's no secondary liquidity because these things are siloed. And I'm curious, I'm not sure what the process is in order to break down that barrier. Like maybe we need a lot of companies to agree to issue on Superstate or Aave's version of it or something else at the same time, or
Securitize, there's tradable
securitize or
yeah.
and any of them. But how do you do that? Because that's the key to unlocking this. Anyone can go ahead.
I have the answer. So what did we just do with stable coins, right? How is this different than stable coins? Yes, with stable coins, you lock them up. But the issuer has a duty to KYC and AML, and then someone receives them. And then based on the activities of that individual, if you send your securities to North Korea, you're going to get in trouble because it's based on behaviors and activities, right? That's the stablecoin model. And yes, they have frees and sees, but does it really work because of latency? I don't know. But I think when you step back and what we're seeing right now, it goes back to what Brian's doing. This is a massive convergence trend, right? We're taking equities and we're canonically making them tokens. We're taking tokens and we're turning them into equities on the DATs, right? So my question for Brian is, when are we going to tokenize and issue your DAT canonically on chain? And by the way, they all have different economics.
We have announced it. So yeah, two thoughts. One is I couldn't agree more with you guys on everything you're saying on tokenization. In my opinion, finance is built on antiquated rails. Stablecoins are literally just like RWAs or tokenized dollars. It works on ACH, which was created 50 years ago. And even fintech is just this front end wrapper that if I sent you $10 with Venmo, it would use ACH on the back end. So blockchain and tokenization reimagines the rails themselves. And then the second big thing is finance is rife with intermediaries. That's why DeFi is such this big thing. And so this can help us remove all these rent extracting intermediaries that we really don't need given where technology has progressed to. And then second thing is we have announced our intention to tokenize Upexi equity via Superstate. In case it's helpful, it was really two main reasons why we chose to do it with them. One is just exactly what you said. So direct issuance of stock on chain for global access, not a wrapper, which can fragment liquidity between wrappers. It's not restricted to just ex-US. And then also holders are getting the exact same legal and economic rights as traditional equity. So that was one big reason. And the second one is we are hyper-focused on compliance and legal and regulatory risk. And Superstate is doing everything exactly correctly. They're dotting every I, crossing every T. They're an SEC registered transfer agent. They're working on regulatory clarity with the SEC via things like Project Open. When you tokenize equity via Superstate, it has strict compliance with securities laws. So they have these allow lists in terms of who can actually access your tokenized equity and who have actually KYC'd. And so we got very comfortable working with them to eventually put Upexi equity on chain.
I'll tell you what I'm really interested in is, Chris, I understand what your point about regulation and so on and so forth, but I'm waiting for one company to just put everything on chain. Especially one major company that would essentially force anyone who wants to own that share to engage in the on-chain economy. Imagine if Tesla decided to just completely go on-chain. At that point, how many of us own Tesla shares even indirectly through ETFs? We would be forced to participate. I'm not quite sure what that would take, but I almost wonder it's a hot up and coming company. Palantir is obviously not up and coming anymore, but something like that would essentially force the hand as opposed to a nice to have. So Brian, I'm waiting for a big announcement from you guys that you're delisting from what is it, NASDAQ and just going completely. I'm just but I wonder if that's what it's going to take. All right. So Ram, and Chris, you may remember from the last time you were on the show, I always like to wrap up by giving each guest a chance to share something that was left on the cutting room floor or If you have some sort of interesting contrarian opinion that you're dying to get off your chest and start a Twitter fight about, I'm all for that too. Chris, why don't you go first?
Yeah, I think we're in the golden age of convergence. That's Galaxy equity. Now's the time. Institutions are coming in. And I think my contrarian take is that the one thing that's preventing further progress beyond this, as I said earlier, is a lack of futures, a lack of listed U.S. futures, because they solved so many things. And that's what I'm focused on in the coming weeks to watch.
Actually, if I could push you on that, because I mean, there are futures for obviously Bitcoin, ETH, Solana, I think XRP too.
Barely.
Yeah. What are there 2 or 3 assets in particular that you have your eye on?
Everything beyond those 4. Seriously, this unlocks everything. It'll unlock ETFs. It's going to unlock basis trading. It cements them as commodities. Like, this is what's needed next. This is one of the most important. We have a massive gap in the United States because, and honestly, this was an SEC issue. They prevented exchanges from listing. That it looks like the window's starting to open, and that's the missing link, and that's what needs to be solved for.
Okay. Ram, would you like to go next?
Well, I was just looking at the report for American Eagle. That was the Sydney Sweeney. That thing is up 24% report after the close. So that's just evidence of these non-consensus ideas like retailers that were beaten down to tariffs working. I expect that to continue to work. I think the mortgage refi concept, we talked about that a few weeks ago, like Better Mortgage, still own both of those names. I think that's going to keep working too. On digital assets, I think it's a timing thing. You just got to wait a few weeks. It really depends on most of the day now. I would position for a rally through November. It's just you got to time it well. There's some, there's just some chop to get through.
Mr. Rudick.
Yes, I will stick to Datland because that's what I think about all day pretty much. And yeah, maybe I'll talk about how many DATs can potentially work. I think that I'm somewhere in between Chris and Ram. So my view is that only 3 to 5 different assets can really work over the long term for a DAT, and that there's only going to be 3 or so companies within each DAT that can really compound NAV and create value for shareholders over the long run. Thought behind this is 95% of altcoins are down 95% over 5 years. And the biggest determinant of any DAT success is going to be the underlying performance of the token that it's underpinned by. And so I do think that a lot of these trades can work out. Someone can come in at one time, see it move to 2 to 3 times. When the registration statement goes effective, you sell, and it works out to be this really great annualized return almost regardless. But I think like if you're looking for these long-term winners, it's probably kind of going to be far and few between of these companies that could potentially come close to replicating MicroStrategy's success.
And just for me, I have 2 quick fun things, I guess. One, Ram, I know you are the king of the nothing burger. I tend to, I think, be a little more risk averse.
Not my new moniker now. The nothing burger.
Mr. Nothing Burger. Start making a Halloween costume. I tend to be a little more risk averse, especially when it comes to stuff at the Fed, given everything happening with Lisa Cook, et cetera. But it got me. I was watching an episode of The Office last night, and
Great show.
The woman Nellie, it was one of the later seasons, came in, took Andy Bernard's job as office manager, and tried to usurp his authority by giving out everyone raises, despite having tenuous authority to do so. And Dwight was going in to get his raise, and Jim looked at him and said, "Dwight, you know it's not real." And Dwight looked right at the camera and said, "Money hasn't been real since we went off the gold standard in 1971." And I thought that was pretty funny. And it reminded me why Bitcoin and crypto is so valuable. And then 2, for all NFL fans out there, welcome back to the season. For what I hope are millions of listeners in the Philadelphia area, go Birds. And with that, thank you everybody for watching and listening. Thanks to Ram as always, and Brian and Chris for joining. And we'll be back next time with another episode of Bits and Bips.